We can go ahead and get started. So welcome everyone to the Hunt Scanlon webinar on driving sustainable growth and strategies for maximizing equity value in executive search firms. We've got a really great panel today. Should be a really informative discussion. We're really excited to have you all here. So one quick programming note. So there will be a 15-minute Q&A portion at the end of the webinar. You can use the Q&A button at the bottom of your screen to submit your questions at any point, and we'll try to get to as many of those as we can, like I said, in the last 10, 15 minutes. So with that, we'll start it off with introductions. I'll kick us off, and then I'll pass it to the other panelists to introduce themselves as well. And then from there, we'll jump right into the webinar. So my name is Cody Crook. I'm a managing director at Hunt Scanlon Ventures. Hunt Scanlon Ventures is an M&A advisory firm that specializes in the human capital space. So we work with sellers, strategic acquirers, as well as private equity investors, really throughout the entire gamut of the M&A process. And so with that, I'm happy to kick it over to our panelists. Ravi, you're at the top of the screen for me. So if you want to kick us off, feel free to give a quick intro.
Okay, great. Well, hi, everyone. Ravi Sarin. I'm a partner at AEA Growth. At AEA Growth, we focus on investments in tech-enabled services, software, and healthcare companies. My background is I've been in private equity for about 20 years, investing in growth companies. So started my career at Bain Capital, and then was at Ares Management for a number of years before starting a firm, Roca Partners. At Roca Partners, we invested in the executive recruiting space. We made an investment in Riviera Partners that we've since exited. And at AEA Growth, we are very delighted to be partnered with Eric and the team at Bespoke Partners. So our approach to investing is we like to partner with founder-owned businesses across sectors and have invested across a variety of different professional services companies that are leveraging technology to enhance the way they deliver service. And that's what we saw in Bespoke, and can share more on this discussion around what we look for in the executive search field.
Great. Eric, you want to go next?
Sure. Cody, thanks for having us. Walker, Scott, Chris, appreciate the longstanding partnership that you have with Bespoke Partners and what you do for the industry. So thanks for putting us on today. I'm Eric Walczykowski, CEO of Bespoke Partners. We are a software-focused executive search firm. We play across all functions, think P&L, chief financial officers, product and tech, and go-to-market roles. As Ravi mentioned, we're delighted to partner with AEA Growth. We consummated that transaction in July of 2022, and it's been a complete delight to work with him and his team. They truly have a focus on growing services businesses, partnering with founders and executive teams. And so we are in that process today, which we'll get into in a bit. But for myself, I'm a career operator. Have run businesses at Anderson, Deloitte in the services space, and then have also run technology firms for companies like Thomson Reuters and SUNY Medical Imaging. But a growth guy, really enjoy what we're doing at Bespoke and look forward to telling you more.
Great. Thanks, Eric. And then Andrew, if you want to give a quick intro as well.
Yeah, thanks, Cody. Andrew Kelleher. I'm a director at G2 Capital Advisors, where I've spent roughly a decade of my time all across kind of M&A as a whole. For those of you that don't know our group, we're a sector-focused mid-market investment bank. One of the sectors we advise clients in is what we call technology and business services. And a big part of that practice is human capital management. It's something we've spent a lot of time in over the years. So, simply put, we help founders and private equity-backed companies bring their companies to market for sale. We support in raising capital and also buying other companies and fixing challenge situations. It's roughly 65 professionals and growing, and we're headquartered out of Boston, Massachusetts.
All right, great. Well, thank you to all of our panelists. So yeah, we'll get right into. We've got a handful of sort of pre-selected questions here, and then as I mentioned, as you all in the audience have questions, feel free to drop those into the Q&A box at the bottom, and we'll get to those towards the end. So the first question I'm actually going to start with, and it's one that I think is almost always a burning question when it comes to M&A, particularly in this space. The question is, what are you seeing currently in the market in terms of valuations for executive search firms? And unfortunately, I think the frustrating answer to that is it depends. And there are so many factors that can, sort of play into, what evaluation looks like for any one particular individual firm. For example, if we're looking at like a private equity firm as an acquirer, there may be a large difference in valuation if the firm that's being acquired is like a platform play, so like the initial sort of major investment into a space like executive search, for example, versus like a small tuck-in, bolt-on, roll-up, et cetera. I think almost always, I won't say in every case, but in the majority of cases, we do see a multiple applied to EBITDA just to get like a rough estimation at least on valuation. But what that actual number is in terms of the multiple, again, there's a lot of variance. If you're more differentiated, if you're in a really sort of robust or recession resistant industry in terms of your specialization, those are factors that can kind of increase the multiple. If you're a much just smaller firm, or if there are other sort of limiting factors to the business, obviously the multiple can be depressed a bit. So I'm going to pass to Andrew because I know he has some thoughts on this as well. So yeah, Andrew, feel free to take this one and share some color if you would.
Yeah, and thanks, Cody. I mean, we're going to come at this from the same angle, truthfully, right? Because it really is that question that in a vacuum is almost impossible to answer. And I think a big part of thinking through kind of how you get to value is a function of understanding the market and the moment that we're in, right? We could talk a little bit about that. We can kick that one around a little bit. And it's also thinking about the business, its maturity, and where it's heading. And so I think, for me, when I start to think about the market today, I mean, the market has changed a little bit, right? I mean, midpoint of last year, the world changed pretty considerably. And I think we've seen a little bit of softness broadly across HCM as a whole. And that's prompting, a deeper dive into really appreciating the growth profile of a business to actually appreciate what you can get with respect to a multiple. I think, double click on your comment with respect to a multiple of EBITDA. That's where, most of this market is going to trade. You're going to have to really demonstrate some unbelievable tech chops and really have recurring revenue built into that in a way that is undeniable to start to clip into that part of the world. I don't think that's the majority of our audience. Maybe I'm wrong, but typically I think we're talking about a multiple of EBITDA. And I think the other part that, just sticking on this theme of valuations is you probably also are talking a little bit about structure to get to enhanced value. So, the all cash kind of deal is pretty tough in this space, right? As a tuck-in, and maybe you've secured your management team, I guess there are some scenarios, but I think looking at the amount that's rolled impacts value quite a bit. Looking at how much cash, like all those factors are material when it comes to valuation. But at the end of the day, you touched on this. Size matters, scalability of the platform matters, technology matters, growth profile. All those things that we know are inherent in growing businesses really help you drive larger values and help you get to kind of more stretch multiples. And I think this is one of those topics that you pull in advisors to help you with, right? I mean, Cody, it's why it's the type of follow-up you want to have with people. It's the type of follow-up I want to have with people is let's discuss where you're at today, what value, a private equity firm would see in you as a platform. Are you at the right scale to be a platform? And, or is it more of an add-on conversation? Because those are going to be two very different topics.
Yeah, absolutely. Yeah, I think the point on the deal structure is a great one too, because, I think a lot of times, founders will approach M&A and be ready to, fully exit and retire. But a lot of times it's a really tough ask, because what, an acquirer is buying a lot of times is, the people. They say the assets going up and down the elevator every day. It's the people and the relationship. So I think, creativity, willingness to stick around, whether it's, an earnout or, an equity role, whatever the case is, in that deal structure, those are all levers that, can be pulled to, sort of enhance the deal values potentially. So just good things to keep in mind if, if M&A is something you're considering. Andrew, you touched on this in your answer. It has been a tougher year in the executive search space. I think we've seen a little softening, certainly relative to last year. So Eric, this question is for you. How do you see I guess, the rest of this year playing out in the executive search space, and looking into 2024, what's sort of your view on the market as a whole?
Sure. So, Cody, I've got CNBC on in the background, and I'm thinking through. You've asked a nice question to Andrew that is very factual, and you've asked me to bring out my crystal ball. I wish I could do that, but no. Look, in reality, search has gone through a dip when you think about our end markets, right? You think about the venture community, that space has been crushed. You think about public markets, that's off. The good news for us is we play in private equity, and we have some very strong clients within private equity. And so when I think about executive search and what we're doing this year versus maybe the last 3 years is very focused on new platforms and serving PE firms that have just purchased a new platform and want to transition their management team. This year for us has been largely leaning into our clients and having strategic conversations around the management team, whether they're equipped to weather the storm and really drive value there. And so what I would say for us is I think things are still going well and strong with our core clients in private equity. But I think the rest of the market has definitely seen some challenges when you think about venture and public markets. Look, everything we're reading suggests that maybe the second half of this year, things are going to pick up. What we've seen is, new platform plays are off about 76% year over year in our core market. That said, there's a ton of dry powder sitting on the sideline. And so the conversations we're having, we're actually seeing due diligence pick up with software companies, which is our core market, which should drive increased investment. So I'm extremely optimistic about second half of this year heading into 2024. But the good news is people turn over, and the key for us has been hanging around the net and candidly advising our clients on strategic management changes. And so that's what we're up to and kind of what I think the market has entailed for the rest of the year.
Yeah, absolutely. Appreciate you pulling out your crystal ball for that, Eric. It's helpful.
Cody, one of the things between these two questions that I feel like is worth mentioning too, or that kind of ties these two together on the value piece and the market is, I think midpoint of there was a lot of pent up interest in search, right? We watched a lot of investors kind of go, hey, there's a lot of value. Talent is premium. We're starting to appreciate the model. It's great free cash flow generation. I don't want to bleed into other questions, but we saw this moment of true adoption. Then the market shifted materially on us. We had a lot of folks that had never made investments in the space. It pulled back the buyer universe pretty considerably. And now coming into a softer year, I think you add the softness in the first half, coupled with a eager interest, but not a full understanding. And I think that's one of the things that's kind of held back some of the M&A that we maybe are expecting, would like to see take place in the near future. And it's probably holding us a little bit of a weird spot with respect to valuation. So it's just another market consideration. It's a crystal ball kind of comment around different factors that are playing in, but those two pieces definitely tie together pretty considerably, I think.
Andrew, I think that's such a great point. And, we kind of hit on the market and kind of where the market's at, in broader search. It's soft. Some buyers have been eliminated in that process. But I think it'd be really interesting, given probably a large contingency of this market is search folks that are looking to sell their firm. To hear from Ravi, Ravi, let's think back through. I mean, you've purchased 2 search businesses. What stood out for you as you were going through that? I really want to hit back to how these founders can prepare for a transaction.
Yeah, I mean, I think there's a few different dimensions that we would look for when we're evaluating any business. But I think, as in particular, if we think about the executive search business model, I think the first is, what is the objective of the team in terms of bringing in private equity? Because I think, as Cody and Andrew highlighted, if the objective is just to sell and move on, then the question for us is, what are we investing in, right? We're looking to really partner with a team that's excited to grow their business, scale it, make investments, and with that, that means creating, real earnings in the business. And I think that also plays into the whole valuation topic. Is, there's a multiple. What is that multiple? But then there's the EBITDA. What is that EBITDA, right? Because the team is historically relying on distributions from profit, and with an investor coming in, those distributions really turned into retained earnings that get reinvested in the business. They don't get distributed on a quarterly or annual basis. And so it's ensuring that the team is excited about growing their business and being invested behind it. It's not for us the right platform if it's really a team that's looking to exit. We're looking for teams that are looking to bring in a partner to really scale and then eventually play for a much bigger exit. But some of the dimensions that we're looking for around platform is, first and foremost, it's a people business, so the culture of the firm. Can't speak for all PE firms in terms of what they're looking for in terms of culture, but for us, we're really looking for teams that are operating with a team approach. We don't want to invest in a firm that's a collection of individuals, even if they're very talented individuals. We like to see the team approach because we like to see teams that can strengthen each other, and as the business scales, they actually get scale advantages versus just a larger collection of individuals operating under their own self-interest and self-motivation. So that culture piece is very important to us. I think the other element is process. Ensuring that there's a consistent process so that there's a clear expected client experience that we know will be a high quality client experience across whatever search area, search function, search professional, that there's a consistency to the way the firm operates. And then some level of focus. I think it's that again, may be specific to us, but I think, having some level of focus in terms of sector focus or functional area focus, I think gives the opportunity to have a deeper engagement with the underlying talent, which I think ultimately creates a better search experience for the client. So I know there's some questions around some of the other factors or things that PE is looking into that we can go into, but those are some of the thoughts around what we're focused on.
Yeah, and it's interesting because I think of a lot of what you just said as, I made some notes leading into this, like these are the exact topics, truthfully, right? And when I think about sitting in the seat of the founder in the prep that takes place, I always go back to this moment of, be your authentic self, know who you are, and know the lane that you're in first and foremost, right? Because we've seen the market attribute value to multiple different versions of search. So if you are a sector specialist, that's who you are through and through. That's where you're going. Start off by just being that person, building your plan off of that business model. If you're going to diversify and solution sell, for lack of a better term, multiple different offerings across multiple different verticals, and that's your plan to scale, own that. Like, the DNA, your core DNA, and where you drive growth is important. And I think staying true to that on the front end is really important. We've seen, again, the market attribute value to both. But at the end of the day, like for me, the biggest factors here, and you touched on a lot of these, it's having the management team set up, right? Having your core people really tightly tied to the business and deeply involved, because this is a people business. Like that is paramount here. Like being able to scale through the team is, I think, what gets a lot of investors excited, and that mutual appreciation for growth and desire for growth. And then I think you need to really have a plan and really think about, what does this mean? Right? If Ravi and his team come in and we're a platform for them, why? Like, why am I even having this conversation? Is it geographic expansion? Is it hiring more aggressively? Like building out those value drivers, I think, is really important when sitting in the room. And so the more you can get ahead of this stuff, the more you can start planning today, even if that exit is far downfield. I think the more you can start to anchor on kind of those, taking the business as it is today, owning what it is, but starting to really plan for, the growth of the future and being able to communicate that. It's a small thing, but it's a really big deal. I think it's a really big deal.
I think that's such a great point about, starting to think about that now, because, from our perspective at HSB, so many times we'll talk to a founder who is, essentially ready to retire, and, this person wants to sell and, move on right away. And it's very rare that we see that. So I think starting to, kind of put these plans in place, put that process in motion early on, even before you're really ready to maybe even explore M&A or an exit or a sale, whatever that might look like for you, I think is a really wise move. So appreciate the color on that, guys. I want to come back, Andrew and Ravi, to you. I mean, we just talked a lot about what makes an attractive investment in an executive search firm. I want to kind of take a step back and look at executive search in general. I think it has drawn a lot of attention, at least in the past few years, certainly from our perspective, from private equity. So I'm curious, from your point of view, what has attracted private equity to, the executive search space in general? So Ravi and Andrew, I'll turn that back to you two.
Yeah, it's interesting if you think about professional services and markets, executive search may have the least activity among private equity firms relative to other sectors. So I guess the question is why hasn't there been more active interest in executive search? I think part of that is the industry landscape. It is a very fragmented industry, and so most firms are boutique firms that are, they're not scaled enough to have, to capture the interest of private equity firms. I think they also are typically self-managed by the team of professionals, so they haven't invested in building a management team, which makes it harder for a private equity firm to come in and invest, because those are meaningful investments that need to be made, but take time. And I think having a team in place makes it easier. So I think the fragmentation has been one of the obstacles to attracting private equity interest. I think what we're seeing as the market evolves is, I think, two things. On one side, you've got some of the boutique firms that have scaled and gotten to a scale where they've invested in a management team and now are more attractive to private equity. I think on the other side, private equity firms are willing to roll up their sleeves more and really help play a role in that team building process as well. And so I think there's that convergence of the evolution on both sides is bringing in more private equity interest. I think the other element is, I think private equity firms are becoming more acutely aware of the how important having the right person in the seat is, and therefore valuing executive search, right? The opportunity cost of having the wrong person in one of our portfolio companies is so much higher than the cost of bringing in a search partner. So I think the sticker shock, and of course, we as PE professionals will always look to negotiate on fees, but I think the sticker shock of fees has come down, recognizing the value that a search partner can bring to a company. And so I think that appreciation, as there's been more demand for talent, as the pace of business has increased, has also made the strategic role of executive search more valuable. And I think that's also driving the interest from PE investors.
I don't think I have a lot of what I do today. So I'm 8 years into G2, but I manage a lot of our sponsor coverage activity. So for the broader audience, a lot of private equity engagement. I don't think I have a single meeting where a CEO, a CFO, some version of a talent conversation comes up. And it's not because I'll be solving that. It's because it's typically a pain point or something that's being highlighted as a reason for the platform going so well, right? When we tie back to a lot of success with investments, I think I think I'm not overstating too dramatically here. Like, a lot of that is a function of team. And so, Ravi, I totally agree. I think there's this moment where, you kind of looked around and realized that, what's driving return, what's driving superior outcomes. A lot of time it's talent. And then there's this whole sector that has basically been virtually untouched up until 5-ish, 6 years. I mean, it's been really, really immature with respect to investments from private equity. And so I think there's a natural curiosity around that space, and it doesn't behave all too differently than a lot of other business services. I think it just had been underinvested in. And so it's been a really, really interesting moment watching kind of some of these success stories take place and watching investors come in. And I think two things that I see that are interesting is, you mentioned the fragmentation piece. There was not a lot at scale, and that was challenging. And for lack of a better term, there's a little bit of this cottage industry where people are independently very successful, but not building for scale, right? So I think that presents a challenge and then also an opportunity, because now, I think for you and a number of your peers, when you look at these really, strong, successful kind of mid-market or lower mid-market companies, there's a very fragmented landscape if acquisition is a driver of growth. There's also a number of levers where I think we're finding management teams that say, hey, we've gotten this far, the next 20 or 30 million of growth is going to be tough. Partner would be great. A partner to help us think through operationally how to get there would be really helpful. So I think all of a sudden there's a number of different ways to deploy capital, maybe get to a larger equity check over a period of time and create, more upside in the investment. And, again, you're investing in people. And so as long as there's an aligned vision, a lot of different ways to get a great return and build really good businesses. And I feel like, there's a little bit of momentum behind that.
Yeah, that's great. I think you bring up another great point just about, founders who are, they're still totally bought in to the business, but maybe they've sort of hit their cap in terms of like, they're the 20 million CEO who's not going to get to 30 million, at least on their own. And so that's a great, opportunity for a private equity firm to come in because it is a motivated management team. Maybe the firm has a great culture, all these things that we've talked about. And you can really, create value and realize significant returns. So yeah, I think great points, and that obviously it's been a big attraction for private equity investment.
I guess a lot of my comments, and I think generally the comments have been around an executive search firm that would be a platform for private equity, and that's actually not necessarily the value maximizing path for an executive search firm, because I think as you think about the scale that's needed and the investments needed to be that platform and investing in the management team and infrastructure to support that scale, those are significant investments that may take the earnings power of a firm and bring it down dramatically. It may even require all of the earnings of the firm to build that infrastructure. And so, as we think about maximizing value, I think there's also the opportunity to join in or merge into a platform that has already made those investments. And so you won't necessarily be burdened by having to make those yourself. And you'll be part of an organization with more scale. And with more scale, there will be more value. As we talked about at the beginning of this discussion, the multiples are all over the place. And one of the factors that drives multiple is scale, frankly. So being part of a larger scaled platform can actually create more value if you're getting equity participation as part of a merger. So I think that's another area that we can probably share some perspective on. But I think a lot of firms that have built a really strong brand in their area of specialization, or have built a really strong culture and strong team, may not want to go down the path of hiring a CEO and a CFO and head of CIO and chief people officer. And if we think about the what can end up being a dozen people to run an organization, it may be cost prohibitive, right? And it may not be the value maximizing strategy after all. So just another thing to consider is the exit path, or at least the way to make turn your firm's equity value and maximize that is potentially joining up with a scaled platform that's already made those investments.
Well, and Ravi, you make such a great point. I mean, one of the things I didn't share earlier is I've actually done 6 founder transitions. And when you think about those founder transitions, and the founder who owns the material amount of the business, that investment they're making off their own balance sheet or their own bank account. And for every one that works out, there's probably 50 or 60 that don't, in terms of bringing in a management team, ceding control, distributing decision-making. And so that's actually a high risk investment for a founder to make in many cases, versus what I think you've described earlier around a tuck-in situation. It's actually less risky in many cases to tuck in an asset to a platform that has already invested or laid the foundation for significant growth. And so I think it's a great point you bring up.
Yeah, and to both of your point, I mean, you can maximize value both ways. One is not create more value inherently, right? There's material upside in both situations. And for me, the tuck-in is always a function of, this word of culture. Do you like the people you're joining? Do you believe in the path that they're heading down? And do you think that joining forces with them is going to make you better than you are today? Like, to really oversimplify it, if the answers to that are yes, yes, and yes, I mean, that more often than not, it can be a much better path.
Yeah, absolutely. Great thoughts all around. So Eric, I want to come back to you so we talked a lot about, sort of approaching M&A and like, some things to be thinking about, what makes, executive search, potentially an attractive investment. Bespoke has obviously been through, a transaction with AEA. So I'm curious to hear from you. What do you feel are some of the, the key considerations for search firms and in particular search firm founders, as well as investors, when it comes to maximizing value post-transaction, as opposed to like sort of gearing up for the deal? What are some things that, that you've seen or, that you've sort of, kept in mind to realize, post-investment?
Yeah. So, and I think, Cody, I think the question for me actually starts pre-transaction. And so if I go back 3 years before we consummated a deal with AEA, the foundation was starting to be laid for that. Bespoke actually consummated a formal board of directors with experience from different facets, which then led to bringing me in. And as part of that process, it was really understanding what Christy, as the largest shareholder in the business, wanted out of her future and where she wanted to go. And candidly, I didn't come in with the notion that I was going to run the business. I was open to whatever she wanted. And what we figured out after 3 months, she actually really liked doing search and spending time with clients, not so much running a business. And so we consummated that transaction. And, I think what Ravi and Andrew have pointed out today, search professional services in general is a people business. And so you really have to start with the people and the culture. And so we talked about the founder, understanding what the founder wants, needs out of the future. But then it's, okay, so what are we going to put around the founder? Because if Ravi's going to make an investment, he needs to invest in a team, including the founder, that's going to carry the business forward. And so we started looking at an infrastructure and our people that could lead the business into the future. And so what that created was, setting up functional units who had deep discipline around different executive search functions, where they could be in a situation where they could build practices and businesses with scalable processes. It was around putting an executive leadership team in place that could carry the business into the future. And so all of that work was actually consummated pre the AEA transaction. And one of the thesis, and I'm on a mission for this within private equity in general, is it really is about the people. And so we invested in a chief people officer that built on this culture that was set up in Bespoke and really layered on some fundamental values that could scale. We built a Bespoke University, which actually was inspired from Anderson and Deloitte when I was there, where we actually have a formal development program for people that come up through our process that continue to grow and learn every year. And so we've made a big investment in the people. And so this was done pre-AEA. But as part of that, what I also want to hit on, because consummating this deal is so important, and one of the things that I see fall down time and time again is these transactions, is misalignment in value. And we touched on that at the beginning, but I would say, December of 2021, I partnered with my CFO, and we actually did a comparables analysis, not only of public comps, but also other transactions that were done in the space as a multiple of EBIT to drive what we could expect in value. And so before we started on the journey, we actually aligned with Christy and the board on what a reasonable transaction value would be at the time. And that data is available if you just do some digging to do that. Now, the other piece on that you really have to look into, which is I see as a major sticking point in these deals, and we've looked at a dozen or so in the last 12 months, is what is adjusted EBITDA? So what are you valuing the business off of? And one of the things that I quite often run into, particularly with founder-led businesses, is founder compensation. And so it's this notion of, hey, I'm really not paying myself, but I'm taking all the distributions. And so one of the things that you've really got to be smart about is, what does a search partner make if that's going to be your role going forward, and factoring that into adjusted EBITDA. And so we did a bunch of work before. We actually did a bunch of work on what a deal would look like. We actually hired an advisor as part of that process. And there was a question in the deal about how we met AEA. Candidly, we met AEA through Hunt Scanlon. Scott Scanlon and I were joined at the hip through our transaction. And I'll never forget, it was a Sunday afternoon. Scott calls me and he says, I think I got the right buyer for you, and went through that process. But the real question was around value. So we prepared ahead of time. We came up with a strategy in terms of what we wanted in value and in a partner, because we had a pretty clear vision on where we wanted to go. And so we wanted an experienced partner, someone who actually had invested in the space before, because that's a key differentiator, particularly given the market dimensions we're going through right now, that had experience in investing in the space and could partner with an existing founder and management team to achieve the vision. And so that was done beforehand, went through a phenomenal process with AEA. I've done over 50 M&A transactions. And what was fascinating in working with AEA is what was said on day one was delivered on day 90 when the deal closed. There were no surprises along the way. There was great communication going forward. And so when you look about, what we're doing now to achieve value, focus on people, number one. And we're getting ready to announce some bigger promotions later this week. So stay tuned for those. We're very proud of what Bespoke University has done and kind of our homegrown model. The second thing is we've leaned into what has differentiated Bespoke. And so we had an idea coming in, and what we've done over the last 12 months is really invested in a differentiated strategy, what the moat is significantly, and stayed focused on that by building both processes and technology behind that. And then the final thing is just a relentless pursuit of our customers' success. And we've got a phenomenal team that's after that. But those are really what I would say are the three things that we're working on to achieve value, along with a close partnership with our investors. I actually meet with our investors weekly, not at their demand, but at my interest, because it's such a great partnership. And every time we get together, there's great ideas that come out of that.
Yeah, no, that's great. Well, thanks so much for the thoughtful color there, Eric. I want to come back to you, Eric, and then Andrew and Ravi, feel free to chime in on this last one as well. This is our last sort of pre-selected question, and then we'll get into audience Q&A. We're sort of changing directions slightly. So there's been a lot of buzz as of late. I would say certainly this year, probably later last year, around AI. I think in particular generative AI. So OpenAI's ChatGPT product. Google came out with Bar. There are a handful of others that have just created a lot of buzz. How have you seen so far generative AI affecting the executive search space, either positively or negatively, or maybe not at all? And then sort of as a second part to the question, what do you feel the implications are for the industry moving forward, and how can search firms start to think about using AI, going back to the sort of the title of the webinar, to really drive value creation within the firm? So Eric, I'll start with you, but like I said, Andrew and Ravi, feel free to chime in as well.
So Cody, when you shared this question, I wrote on my notes, yes, yes, and yes. AI is absolutely going to disrupt executive search and the way we know it today. And then I thought of the old movie line, but if I tell you how we're doing it, I'd have to, but no, in all seriousness, one of the investments we made in the first 6 months of me joining Bespoke in 2021 was in a chief technology officer. And so we have scoured the earth looking at the technologies that support search. We put together a very thoughtful strategy of where that's going. We are way ahead of schedule and under budget on our technology. And artificial intelligence is absolutely at the heart of where we're going. And that's one of the things I look at, whether I'm at a large Trek firm right now or at a boutique. Having a strategy and understanding the implications of where this is going to be extremely important. Now, when I say disrupt search, I mean, I did actually Deloitte's first product business, which is now a $5 billion entity within Deloitte. And the thing that we were very careful about when you think about a tech-enabled service, and I think AI is going to be a tech-enabled opportunity within executive search, is it's not going to replace the artistry. And so there is artistry that's done between the board and who's going into the management team, or the CEO and who they're hiring, that I don't see on the near future AI replacing that. But what I do see is AI enabling that. And so what I talk to our partners about, who are very steeped in our strategy and where we're going, is if you think about the world right now and you're a painter and you're painting with just a small slice of the color wheel, what AI is going to allow you is to unlock all of the colors. And it's just going to make your artistry that much more impactful for your clients. And so for us, technology is the base, but we've got a bunch of proprietary information and data that layers on top of that allow our artists to do great work. And so that's kind of how we're looking at it. And Cody, I just realized that I said a whole lot and I really said nothing at all, but in generally that's how we're looking at AI and where it's going.
I would make a small comment, less eloquent than Eric, and definitely less experience across kind of product and service integration. But I think when I look at the opportunity, not being an AI specialist at all, it's just very simply put about process improvement and greater efficiencies for your search team. Because if today you can take those costs, those massive value drivers within your organization and make their lives better, make them more efficient, make the customer experience better using technology, I don't think that core skill goes away. I think what happens is you enable your people to be more efficient and serve their clients better. That's the part that's exciting for me. And I think when we look at tech as a whole, more often than not in search, where we've seen some of these really exciting transactions, and Eric, you and Ravi talked a little bit about some of the tech enablement. It's about, how can we do things better than the other competition? How can we serve our clients better? This is another big piece of that. This is another exciting piece of driving growth in that manner.
Yeah, absolutely. Yeah, I think, to sort of summarize what you both said, it's not necessarily that, AI or tech in general will replace, executive search or recruiters. Ideally, it will make them better at their jobs and more powerful, more efficient. And again, going back to the kind of the theme, just increase value, within the firm. So, yeah, really exciting. We'll kind of see what ends up happening. But
Cody, I just want to build on Andrew's comment. I think, Andrew, I think you very eloquently and succinctly pointed out the two levers. And the first one is efficiency. And when we hired our CTO in 2021, mission one was, how could you make our professionals' job easier? And then the second thing is, how can you allow them to unleash more value on our clients? And that's exactly what we're doing. And so you think about the people, the job just becomes better in terms of robustness and experience. And that's our relentless internal focus. And the product is lock in value with our clients. And that's where we're headed.
Okay. Well, great stuff. So we have several really good questions from the audience so far. So we'll try to get to as many of these as possible. So I'm just going to open it up to the panel. Whoever wants to take these, feel free to chime in. So the first one says, so we're a pure play retained search firm that helps PE firms hire leadership talent in the tech function. We have 10 employees. We've been around for a couple of years. 100% of our revenue is based on retained search. You mentioned earlier recurring revenue. What sort of revenue streams or services do you see resonating the most with recurring revenue, and what is the market appetite of these service lines that provide that recurring?
I think this question is probably my fault because I started talking a little bit about tech on the front. So I'll give a couple comments on this. I think there's probably a few different ways to take the answer to this. So first and foremost, when I think about the broader tech and business services BPO universe, there is a lot of pure tech out there. It trades very differently than executive search, meaning you're talking about products versus services to oversimplify it. And I think that, products tend to, if they are, revenue generating, it is reoccurring revenue, they attract high valuations. It's a very, very sought after type of revenue. I think more often than not, where this starts to blend into the search world, and Eric, you can speak to some of the things that you guys are doing. I think you start to see tech enablement drive enhanced value. And those can be things like we're just talking about with AI, where, you know, it's increasing the stickiness of the customer, it's optimizing your workforce, you're creating a better mousetrap for what you do. You're delivering better and doing it in a more efficient way that's driving enhanced margin. And then there's also products like, you know, maybe it's a consulting service, or maybe it's some sort of DEI component where there's a technology within your firm that you are selling. And when you start to get decent scale with that technology, that creates a lot of excitement. Typically, when you're creating more efficiency within your organization using technology, that also creates a lot of excitement for investors. But they are kind of two different things. So if anyone wants to expand on that a little bit further, I tried to take two very wide things and bring them into one. I'm not sure I nailed it, but.
I think what Andrew was mentioning at the beginning that may have prompted this question is that for executive search firms that have the retained search model, there's an interest from private equity. The valuation would be based on an EBITDA multiple. If it were software business that has recurring revenue, then that valuation of that business may be valued on a revenue multiple. So just that's the distinction in terms of how to make a retained search business have more valuable quote unquote revenue versus others. It would be the amount of repeat business that the firm has with its core customers, as well as the consistency in the process. And often the best way to have consistency in process is by technology enablement, as Andrew highlighted. And so having a demonstrated technology capability that enhances the experience for the recruiters so that they deliver more consistent and better client service, and frankly makes the process for the recruiters more streamlined as well, so that potentially they can do more work or be more effective in their work. I think those are the things that can enhance the quality of the revenue and I think are differentiating in this market.
No, and Ravi, I mean, you make such a great point, because I think that, you know, it's a splitting a hair, but it's a difference between reoccurring revenue and recurring revenue when we talk about that sticky customer base. And one of the things that we've debated significantly internally is the notion of recurring revenue. You don't want to force that on your strategy, because that can take you down a whole rabbit hole. And so it needs to naturally fall out of whatever technology solution you're working on. But I think this question does hit on a couple of things. Again, we run into when we've looked at tuck-in acquisitions is customer concentration, number one, and paying attention to that. And that was something we were very focused on at Bespoke over the years. But then the second thing really is when you talk about recurring revenue, what type of sustainability, or even reoccurring revenue, what type of sustainability are we talking about? Are we talking about a 6-month trend, or are we talking about a 4-year trend, which is totally different when you think about valuing your reoccurring revenue in a tuck-in?
Yeah, absolutely. Okay, so another good question, Eric. This is for you specifically. This is going back to something you mentioned before, but the question, you say you've done 6 founder transitions. Can you just elaborate it and speak a little bit more to exactly what those were and sort of the process?
Yeah, sure. So largely similar type entities where, let's say the business had reached scale somewhere in the $15 to $30 million range. And what I would say about that is it's a unique individual that can take it from that to the next level, but also have founded the company, because the motion or the energy to get from 15 to 30 oftentimes is much different than 20 to 100 or beyond. And part of that really is building a leadership team that you trust to actually make the decisions for you. And I can tell a whole bunch of war stories around founders standing up in front of an accomplished CEO trying to teach them finance and accounting and the like. We had none of that at Bespoke, but it's a very interesting process or muscle that you have to go through. And part of what I've looked for and was very important in this one is truly what's the intention of the founder. I don't come into these situations anymore with a preconceived notion or strategy of, hey, I want to be CEO and I want to run this company. I look at them more like, hey, I've got a founder who hasn't seen scale to 100. So how, and if that's their goal, what's the best way to help them achieve that? And it takes a lot of discussion, one-on-one time around that, and then a lot of cycles with decisions that are being made, so folks understand exactly why the decisions are being made where they are, which may not be the way it was done in the past, because a lot of the founder organizations, all the decisions bubble up to one person, and that's just, it's not scalable.
Yeah, absolutely. So we just had another, I think, really interesting question come in, and maybe Ravi, you can speak to this and just, your perspective at AEA Growth. But there's been a lot of talk around the value of, sustainability and, process delivery driven by technology and tech stack. So how do you view that sort of that value driver coming from a proprietary sort of, homegrown technology system versus like third party, maybe off the shelf systems like Encore or some others that are out there?
Yeah, I don't think there's additional value created by building something that's already out there. And it may require more investment, and you may make that investment and it turns out it's, not as good as what's out there, or it requires significant investment to keep up with third-party solutions. So I think wherever possible, utilizing third-party technology is probably the right strategy. There may be times, though, to create customization, that there's proprietary utilization or proprietary linkages of software that can enhance what's available from a third-party perspective. So I would really distinguish, if there's nothing out there and you've identified a way to improve your process through making investments in technology and creating proprietary systems, great. And I think you have to make sure that there's an ROI there. But inherently, there's not additional value created by doing something that you could utilize off the shelf.
Yeah, great points. So we have time for at least one, maybe two more. We've got several, so I apologize, we're not going to get to all of your questions, but hopefully a couple more here. So this question says, in terms of scaling and value creation, either through a merger or just growing organically, other than just adding more good recruiters to the executive search teams, and there are other means, would there be other means you would suggest or interested in? I think the question comes from the fact we see this a lot, from our perspective at HSB. Good recruiters, top billers are gold in executive search, and they're really hard to come by. And that may be part of the reason that there is so much fragmentation in the market. So I guess, in your view, what are maybe some of the other things you'd be interested in outside of just like hiring good recruiters to, kind of drive more value for an executive search firm?
Yeah, I'll jump in. I mean, one thing that we look for is, does the organization have a culture and process that can bring people in early in their careers, train them to be successful partner recruiters? Because I think that is the most sustainable growth that you can rely on, and also ensures that the firm is operating with a consistent culture versus just an amalgamation of talented individuals. So that's one of the ways to differentiate in the space, is to be able to bring people in at the start of their careers and have them grow within the organization to be valuable contributing partners.
Yeah, and Ravi, I mean, just to echo on that, culture. It's not going to work if the culture doesn't fit. We have a very strong culture. We're very passionate about that. But the other thing, Cody, just to hit on, we're not as focused on the rainmakers, perhaps. I'm looking for people to grow our firm that are passionate about our clients and delivering amazing work. That really is our model. And I say that as a self-shaming commercial plug for folks that are looking for a spot they can do great work. That's what our focus is on from the recruiting standpoint.
Yeah, great point. And so this is an interesting question that just came in as well. So one of our panelists has a CEO, and Eric, who is not from the industry. So you're not a practitioner, by trade. And then, potential investors who are obviously not, executive search practitioners as well. And so the question is, how do you bridge the gap of understanding between, the partners in the firm, or, the revenue earners, top billers, whomever has a stake in the firm, and sort of a new strategic direction when approaching M&A or a potential transaction?
Yeah, absolutely. And so, I mean, to start off with, I think not being from the industry, but having a long track record in professional services, both in private equity and large companies, is actually a strength. And it's something that I look at because you see things differently. Now, that said, when I entered, the first thing is I've actually led several searches. So I have sat in the shoes of our partners and I understand exactly what goes on through the process. I felt, the demands of the client and what success looks like. And so that was number one, was to really within this industry, get an understanding of what it's like to be a partner in the search firm. And what I would say is there are a ton of parallels between all professional services firms and what you're doing in search to provide good client experience. And so that candidly is the value. And then one of the other things I've looked at is there are a ton of best practices from other professional services industry that are ripe to be brought to search. And that's effectively one of the plays that we're doing. And candidly, it's allowing our partners more freedom to do what they want to do and do best, which is serve their clients, as opposed to some of the ancillary activities that you might have to do at another firm in your day. And so that's kind of how we've looked at it. As it relates to an M&A transaction, candidly, that's how we built it, right? So if I look at my executive leadership team, I was actually looking for attributes that could apply to search that necessarily weren't from search. And so when I think about my CTO, his first 6 months scouring the industry, talking to every search firm's tech group around what they're using and the like. And what I think has the result of that has been, one, a deep understanding of what works, what doesn't work in search. But then the other thing that I think is very appropriate is a cost-effective way to building a tech strategy within search. And we've applied that chief people officer, chief financial officer, chief marketing officer. So when I look at those different roles, I actually looked outside the industry to bring new insight. But the one caveat was you have to understand this industry cold and you have to walk in the shoes of the partners within the firm. So that's how we've done it.
Yeah, no, that's great. That's great insight. Thanks so much. Well, I think so. We're right at time. I want to be respectful of everyone's time, so I think we'll wrap here. But first of all, thank you to our panelists, Ravi, Andrew, and Eric, so much for joining us. Great insights. I think this was really, really valuable and really interesting discussion. Also want to thank the Hunt Scanlon team. I think Walker is still on as well. Thanks so much for putting this together. And then lastly, thank you to all the attendees. It's great to have you all here, and we really appreciate you taking time out of your busy schedules to join us. And we hope this was really valuable. So with that, we'll close. But yeah, again, thanks all for being here, and have a good rest of your day.
Thank you, Cody.
Thanks, Cody.
Thanks, Walker.
Thanks, everybody, for showing up.
Take care. Bye-bye.